Hello. Hello. This is Carl A. Smith with Carl A. Smith Holdings. How have you been? First off, this week, we want to say thank you to all of our followers. It's been a wonderful experience to receive some very positive feedback for our weekly stock market analysis. This is truly our passion, and we're living it every day. And the comments that we've received, especially with the comments where people have seen great success in following our recommendations or beginning to have what we call light bulb moments where we're seeing new information being totally understood and implemented. And that's the ultimate goal, is for us to try to educate and empower those to help create generational wealth. So once again, thank you so much. Please don't forget to follow us on our Facebook page, facebook.com/Carl A. Smith Holdings. So with that, we'll jump right into our weekly market analysis for July 21st. Seems like a broken record that we are coming to you every week with announcements that all major indices, excluding the Russell, have seen significant movement in price upward to reach all-time highs. And that is exactly what happened this last week, with continue to see all major indices, excluding the Russell, which is lagging pretty significantly across the board. And we'll speak to that in just a few minutes. But we've kicked off our Q2 earnings season, and the banks have reported pretty positive earnings, and we've seen some very strong results. We'll see a few larger credit card companies coming up this week that can kind of continue to potentially push us upward or downward, depending upon what we're seeing with the results so far. Positive results came out from Microsoft this week, but to no avail to continue to push the market downward. So we'll jump right in and look, as always, we'll start with the S&P 500 and begin to do some analysis. As you can see here, we are seeing a little push-pull action that is we see relatively consistently within the market. As the market moves in a very strong direction, it tends to pull back and move forward and then look to what we call consolidate. And we can kind of see this over the last year. Nice push upward, bullish, pull back, push up again, and then now we're in this consolidation range that we most likely will continue throughout this week as we look to hear from the Federal Reserve if they are going to cut interest rates. They do meet on July 31st, if I'm not mistaken, and that date is pretty solid in regards to what they will do across the board. Most news agencies and hedge fund owners believe that they will cut at least a quarter basis points to try to stabilize the economy and kind of curb inflation. But we have seen the market, as we've always said, the market does not like uncertainty, but it's almost guaranteed. If there's anything that's guaranteed, there is a very high probability that they will cut interest rates, which would generate a little bit more positive momentum upward for the market, as the cost of borrowing for enhancements to your own respective company is just that much easier with interest rates just that much lower. So this past week, we have seen that both push-pull option in regards to bulls and the bears kind of getting close to some type of equilibrium, heavily weighted more so to the bears. As you can see, this last week we have closed on our lows. And one of the things that we have seen is that there typically is some type of continuation if price is closing, if price is closing toward the end of its range, toward the close of a day or the close of a week, the market is looking for some type of continuation. So this is one of the first bearish bars that we've seen since June 24th. And this is a signal for the bears to continue to push prices lower. However, with the looming Federal Reserve and moving into a very strong week of tech companies releasing earnings, this could reverse right back upward. And we do anticipate that that is what most likely will take place. There's a very high probability that we will come back up here and continue this trading range and close out the end of the month, still with a bullish candle. And that would be positive for the longer term traders to be able to see that as a continuation to move price upward to come up just above this trend line and then potentially kind of reverse back down. So this is a sell signal for the for the bears coming into this week. However, there could be that continued push-pull action. And if we do push below this 296 area, which would be just that much closer to the low of the previous week, we do anticipate some type of rolling downward toward value area high, which is roughly about 292.50. As the tech earnings continue to push out, obviously within the S&P, it's heavily weighted towards Apple, which doesn't report into the first week of August, if I'm not mistaken. We do see some larger names this week that could give us that strong momentum. But I believe that most S&P traders are very much holding on to the notion of waiting until they get a solid piece of direction coming from the Federal Reserve. So with that, we anticipate a movement back upward this week with the S&P 500 to help us continue into a trading range and then look to close out the month relatively towards another high, and then waiting for the Federal Reserve, which most likely will push us to significantly more all-time highs. So with that, we'll move on to the NASDAQ, which is triple Qs. Also, the NASDAQ, as well as the S&P, did reach all-time highs this week. Similarly, however, there have been some superior earnings from Microsoft, as we stated earlier, but that was not enough to continue to push us upward, and we did close on our lows as well, and significantly below over a year-long trend line, as you can kind of see here, that we anticipate a continued breach downward, especially toward the latter part of the week, depending upon how Snapchat reports on Tuesday, Facebook reports on Wednesday, and Amazon reports on Thursday of this coming week. And concluding the week, the biggest name there is Twitter before the open. So this could lead to another bearish week, depending upon those results. We do anticipate the NASDAQ, which has obviously been on a crazy tear over the last year plus, and certainly since the second half of the year onward, very, very bullish. And there is an opportunity for us to retrace back down to give a little bit more momentum to move forward. As you can see, there is a pretty large distance between where we have closed and to where some of our major moving averages lie. So there is a little bit more momentum to push downward. And again, since we did close toward our lows, and I'll zoom in just a little bit here, as we did close toward our lows of the week, sending a stronger signal for the bears to continue to push downward. So we'll watch that. We do have a few targets, definitely down towards the 186, 187 level. And if we do breach the value area high, we do have a low volume node here down at 183, 184 area as a potential for reversal. And then additionally, as you can see there is a opportunity to take advantage of our 20-period moving average, which is this lighter teal line here, as well as our 9-period moving average, which is the lighter green, and coinciding with a low volume node. So if we do retrace, there is an opportunity for us to set some targets to have a re-entry back into the market, roughly about 183.50 area. So we'll move on to the Russell, which has been very, very, very slow to react to any of the positive momentum that we have seen on the S&P and the NASDAQ. So I'm going to call compression. So as you can see, over the last several weeks, we have just been oscillating right within a very small trading range. And what this does indicate is that there is a lot of compression that's there, and over time, that compression needs to go somewhere. So we are anticipating some type of movement as the Federal Reserve kind of repeats out, but we can't necessarily predict which direction. There is a stronger probability that that direction will be upward, depending upon how the announcement is worded going into next month. But we do see very much a solid consolidation roughly around the point of control. And what the point of control indicates is that this is where the highest volume of transactions have taken place over the last 1 year. And we've seen this consistency lagging. However, the announcement from the Federal Reserve could be that strong catalyst to send us forward to kind of break out of this cycle, given that there's been so much compression. That movement, albeit upward or downward, will have very significant momentum. At the same time, we are closing toward our lows, and we are very much tied towards not only our 20 period MA, but also our 50 period MA. So there is that longer term players do see this as a potential buy signal with a small retracement from its highs. If we kind of map this back and then one of these type patterns, we could see this, or even much shorter, kind of aligning around these moving averages. So we do see the touch both of the 50 and the 20, and there is the potential for some type of momentum forward. If we do see it breach these levels at 153, we do see a potential as a pullback down toward kind of the round number of 150, and it does coincide with a little bit of support with a low volume node. So we anticipate at least one more week of compression moving forward, and then looking at seeing the announcement from the Federal Reserve. I know I sound like a broken record talking about that, but it is looming over the market. There is a little bit of that baked into price, but at the same time, the market doesn't like that uncertainty. So there still is some type of probability that things could move in a different direction than what we would anticipate. So we'll kind of close out this week with a little 2 trade ideas. One of them is an update that we have sent out to our subscribers, and thank you so much. We did send an alert out that we were going to come into this week with a short of Nike. We set up with a very strong pattern that we have identified that gives some pretty consistent results. And we did short below 88.57 and took half of our position off just below 87, as you can see with these green teal lines here. And we are holding on to just a little bit longer to be able to see if we can continue to have some price movement downward. However, we do notice that there is coming into a little bit of some type of support, and we are going to set our stops so that we do lock in a little bit of profit if our hypothesis is incorrect in regards to direction. But very positive trade. Beyond excited that a few people took the trade with us and have seen some profit. So kudos to all those that have sent in some feedback, and shout out to Lee Cooley, one of our new clients that's stepping in and ready to begin to get some additional focus on the market. So beyond excited with the feedback that we're receiving. One trade idea that could lead us to some positive results is taking a look at Google. As we look at some of the larger names that are coming in this week, as we stated, for our overall earnings, we do see an opportunity that potentially on the daily chart for Google, we do see a little bit of an opportunity as we have breached below. We have seen lower lows and lower highs, which could indicate a little bit of a bearish momentum for Google. So we will watch it. If we do see a break below this last Friday's low and a breach of our 20 and our 50 moving average, roughly about 11:30, we do see Google kind of rolling over a little bit longer with a profit target down toward the 1,000 level, and our first target roughly about 199. So as with most tech companies, they tend to follow each other. So this is something that we're just watching. We don't have full commitment, and we don't have a beyond higher probability of a sell signal, but we will watch it as things tend to unfold toward the middle of the week. So with that, we'll try to keep it short, and don't forget to follow us. We'll embed the link here at the bottom. And we will see you next week. As with always, it is your money and it should be under your control. Take care.